Amisha as well joins us on the show. Amisha, hi, good morning. You're bullish on the cement sector. There's no doubt that the traction has already started building up when it comes to cement. But how long can it last is the question.
So I think that it can reasonably last over medium terms of 2 to 3 years also. Particularly because the new capacity addition on the base that we are already on is not so high. So as in some region we have started attaining good capacity utilization of above 80%. Those regions, particularly East and Central and North India, will be first to take off. South of course has higher capacity and utilizations are still between 55-60% and they have little longer way to go. But overall as India, I think that it's just the small beginning in terms of the cement volumes started picking up as well as prices have started showing a little firmness. But the trend will continue with, of course, little ups and downs over next 2 to 3 years, I think.
Amisha, let's revisit Maruti. This was the consensus buy stock for the better part of FY16, but of late, because of rich valuations and strength in yen, Maruti has slipped. But closer to 3,400, 3,500, is Maruti a classic value buy?
At 3,400, 3,500, I would definitely say yes. Because I think that the kind of franchise that they have, of course, in the product range and the fourth commission and monsoon being the two critical change factor this time for the economy, Maruti will be one of the gainers. Of course, two-wheelers will also gain, but within the four-wheeler, this will continue to be the key front runner to take advantage of these two events.
Something important earnings
we actually have a price target of closer to 4,400 on a 12-month basis.
That's Maruti, the big one to look out for. And while we're talking about earnings, Amisha, what's the expectation from Axis Bank, the other nifty heavyweight which is going to come out with its earnings today?
So maybe this may be also one of the quarters where one will see little fresh slippage because of the whatever Punjab related thing or some of the other things. And I think compared to, of course, IndusInd Bank or some of the other banks which are more retail focused, the growth could be little slower. But we do expect 16 to 18% kind of advances growth and similar kind of bottom line growth. I would think that on a slightly broader wicket, some of these banks are on a recovery path, both in terms of credit growth, which still will be gradual, but also in terms of asset quality issues. The provisions will continue, but the fresh slippage next year we think should be more under control.
HCL Technologies left and that too will declare its numbers on Thursday. How would you sum up the top rankings within the IT pack and what do you think should one turn bullish on within the IT space right now?
So I think in large cap we've been continuing to back the new management of Infosys and we continue to have very aggressive view on their ability to turn around and come back on above par industry growth, and we continue to believe what they've been trying to do. So Infosys continues to be our top pick within the sector in large cap. Apart from that, there could be a couple of stocks in mid cap, but I would also add here that this quarter results of TCS is inspiring after 4 to 5 or more quarters of little dullness. So I think even TCS will perform, and both these will give reasonably good support both to Nifty earnings as well as Nifty, whatever projections, targets that one is making. So I think both these stocks look good, but Infosys is our preferred pick.
we've seen cracking of a move in the entire NBFC space. I can start with the Bajaj Finance, throw in a Mahindra and Mahindra Financials, Cholamandalam Finance, not far away from a record high. Sundaram Finance, gold standard. I mean, it's a gold-plated company, continues to grow, conservative, but the growth has been consistent. Amisha, why are NBFC stocks, with the exception of 3 or 4 NBFC names, everything across the board is, is in fifth gear?
I think a couple of things here. One, of course, is in particular Mahindra and Mahindra Finance has more to do with the monsoon expectation and the huge difficult cycle that they went through, and they should be coming out. But the other NBFCs, which are more consumer-led NBFCs, as I can see Bajaj Finance and other names that you're talking about, even in the difficult time in the past, they have shown very good resilience and good growth. B, pay commission or monsoon, whatever spending, they are very well placed to capture the growth. And beyond everything, when you are seeing that, within the banking sector, of course, the focus continues to be in retail, but except for private banks, the others lack a bit in terms of their going beyond the IT returns and all that. So most of these NBFCs, particularly if you say even Bajaj Finance, have found the niche within the segment, and they are very well placed to capture that. So I think this is one segment which is given good growth, and the growth momentum will be maintained. So investors have found a lot of comfort in continuing to back this. They made good money in stocks like Bajaj Finance even last 2 years, and that's how their optimism continues, I would think.
Amisha, I know we've extended our appointment with you, so let me just take some closing comments from you. Identify a list of what could be called as high risk, high return ideas. And let me define that for you. The downside could be 10%, the volatility could be 15%, but these stocks on a 1 to 1.5 year basis could easily give a return of 25 to 30%. That's an easy one, Amisha. I mean, I'm not giving you a hard question. 25 to 30%.
I think that some of the... Sure, I understand your point, but I think that I would play it like this, that there are certain groups, corporate groups, large groups, who are, deleveraging themselves substantially. And I think in the process, if they succeed, which is what I would say, there is a risk element that they would succeed, but I think the efforts are very sincere and serious, and some of these can give good returns. In the process, I would think that, particularly Future Group also has been deleveraging, coming back to the growth path. And in case the vigor of all these e-commerce things in terms of discounting comes down, they will be better positioned. So whether it is Future Retail or Future Consumer, some of them look good to me. Similarly, I think that one can also slightly start nibbling at the Anil Ambani Group companies, be it Reliance Capital or Reliance Infra. I think they are also in the process of deleveraging themselves substantially, which is, I think, the first sign of realizing the new reality of the world. And as they are aggressively doing it, I think they also promise, with some amount of volatility, some amount of risk, reasonably good return.
But Amisha, one high risk, high return idea from the large cap space at the current juncture could be Tata Motors. Valuations are cheap, China is a fear, and if the Chinese economy stabilizes, a high risk idea could be a high return idea.
But even last year, if you, I'm sure you know that a lot of investors kept betting on China, while a large segment of institutional investors kept probably getting rid of it because of the fears on China. At current juncture in particular, I would say that having known what are the issues with China and how US markets, their new products are finding traction, I would still think that it is a reasonably good story. and risks are rather medium as compared to probably defining it as high risk, high return. But yes, I think it's shaping up well.
Amisha, good chatting with you as always. We'll let you go on that note. Thanks much for taking the time out and joining us.
Thank you so much.